Most people in crypto lose money. Over 90% of people who enter the crypto space lose money, especially beginners, especially people who run in when there's FOMO in the markets, jump in at the top and always sell at the bottom. Now, why is that? In my experience, it's because people don't have a plan. You don't have a strategy. Then you don't have the right understanding as to what's going on in the market itself, why it's even valuable, why it's worth buying. It's just emotion and FOMO, fear of missing out, that causes people to act. And not having that plan means most people lose all their money in crypto. That's a fact. The people who have a plan are the ones who increase the probability of them making money. Because you're playing against people and institutions now. You're playing against Wall Street, and Wall Street has one plan: to take all of your money. Okay? So the ones with a plan will be much more likely to win compared to the ones who don't have a plan. Okay? And you would be so surprised how many people ride the crypto market up and think they're getting rich because the number on the screen looks very high, and then they ride it all the way back down again, and they never actually make any money. So if you don't want to be one of those people, watch this till the end, because I've seen too many people go through that journey, and my goal is to give you strategies and actionable steps you can take to make sure that doesn't happen. In simple terms, we're going to show you how to build a plan and looking at today's environment and what should be done today. This is August of 2023. So before we go into the plan itself, you got to understand why it's even worth buying. The very basics. Okay, and here's the simplest explanation you will probably hear on the internet. Blockchain is just a bunch of computers connected together. Last time when we connected a bunch of computers together, it was called the internet. And companies owned those computers. And those computers did valuable things for society. So those companies got trillions of dollars. Now with blockchain, we've hooked up computers in a way that instead of one company running them, people are running them across the world. And because of that, we have to pay those people in these coins for them to run the computers. Okay, that's what blockchain is. Now this new way of hooking up computers together is the new wave of the internet. How it's going to be used is still being figured out. All we know is this is a new way to hook up computers together. That's why it's valuable, okay? Now, these computers run apps, just like all the other computers. It's just these apps are called dApps, decentralized apps. Those apps will do millions of different things. Those are still being figured out. So that's going to be valuable. AI will use these tokens to be able to pay people automatically without humans being involved. In the metaverse, the world that's coming, payments will happen automatically without people or institutions being involved, using these coins, using these computers. And it'll probably be running on these computers instead of the computers of Google and Amazon and the others. Governments are already transitioning their systems so they're not dependent on companies like Google, Amazon, Facebook for storage, which for governments is a huge thing. They can guarantee that nobody is going to be able to shut them down. Companies are going to be using these computers to do stuff. At the least, they're going to use these coins to be able to create value mechanisms within the companies. So that's why it's valuable. It's computers that are the framework of the internet. That's going to be valuable. It's apps that are going to be built on those computers. Those are going to be valuable. And it's use cases which we have not been able to see until now. For example, we are focused on using these coins and these computers to allow farmers to sell their produce to people on the other side of the world. Right now, that's very complicated. With these computers, we can automate that whole transaction so the farmer and the buyer can connect directly. How it works, please watch our other talks. But my point is, there's real world value that gets generated by these computers. That's why they're valuable. Okay. Now, in order for us to even understand how to enter this space, why to enter this space, when to enter this space, we have to understand why this market moves up and down first. So we're going to go on a broad view first, then we'll come into the detailed. So one of the biggest reasons why, at this point, the only reason this market pumps the way that it pumps is because they print money and dump it into the system. So looking at this chart, this is the Federal Reserve balance sheet chart. This is effectively telling you how much money printing there is going on. This is not exactly the money printing, but this is a great representation. This is telling you, starting from 2008, we saw this massive money printing happen to save the banks. Guess what happened to Bitcoin then? It pumped. Then, in 2012, more money was printed. Guess what happened to Bitcoin then? It pumped. Then it went sideways for some period of time. And in 2014, tons more money was printed. Guess what happened to Bitcoin then? It pumped. Great answer. Then from about 2015, 16, 2017, no money gets printed. Guess what happened to Bitcoin then? It crashed. Interesting. In 2018, or in 27, from 2015 to 16, we had this pump here. And in 2017, Bitcoin did pump. Okay, I'll give you that. The balance sheet didn't go up, but there was money printing going on in the background. And then from 2018 onwards, Bitcoin dumped until 2020. And later 2019 into 2020, it started to go up. And then in 2020, we saw more money printing and it pumped all the way out until about 2021. 2022, the money printing stopped, so Bitcoin dumped. And so on and so forth, okay? This is a great representation of why the amount of money that gets printed is directly tied to how much the numbers go up in the blockchain space, okay? Again, don't just take this for one-to-one. I'm not trying to give you, this isn't just a look at one chart and make your life decision move. This is just an understanding of how it works. You see, the reason why Bitcoin has gone from 0.8 of a penny to now $30,000 or $70,000, one of the reasons is because it is the future of money. It's the future of the internet. And when I say Bitcoin, I'm simplifying things. I don't just mean Bitcoin. I mean a lot of different cryptos are the future of money and finance. They're the future of technology. They're the future of finance. They're the future. And they're at their beginning. That's one reason why they're going up. Secondly, the governments and central banks are just printing tons of money to save themselves from the debt they've put themselves into and flooding that into the economy. And when that flood of money rushes in, that makes the markets go up. That's a pretty simple process, okay? Now what we've seen is that we can start to predict this process, okay? And that's what we're looking at here. So actually, so this is the actual money printing chart. That's the global liquidity index. Since 2008, we've just been on a money printing run. We print, Bitcoin pumps, then it stops printing, it dumps. Then we print, Bitcoin pumps, then stop printing, dumps. Pumps and dumps and pumps and dumps and pumps and dumps. Okay. This one is my favorite chart right now. This is from Global Macro Investor, from Raoul Paul. Please make sure you watch him. This is a prediction of how much interest needs to be paid. This gold line is a prediction of how much interest needs to be paid by the Federal Reserve within the next few years. This white line is how much money they print. So whenever they need to pay their interest, pay their debts, they print money and dump it into the system. So this is predicting the future of money printing. It hasn't failed us yet. No chart is a given. But this is telling us that within the next 2 years, it looks like they're going to print a ton of money and dump it into the system, which means we see the next run for crypto. Could it happen? Yes. Could it not happen? Yes. Could the world turn upside down? Yes. But the point is, if you can understand that there are times when they're not printing money, the markets go down, and when they're printing money, the markets go up. That's the simple thesis that we're going to go off of, okay? So looking at today's crypto landscape, first of all, just looking at this liquidity wave, we can see that we're midway through 2023, and looks like there's still some more downwards action, but we're close to the bottom of this liquidity wave. The business cycle has turned. The stock market has taken a turn. A lot of things are pointing towards the fact that there's good times ahead. Now, is there a likelihood that things will dump from here? There could be definitely a likelihood. But when you look at the long term, it looks like good times are ahead within the next 2 years. Okay. Looking at the financial ocean, right? Crypto is a small piece of a much bigger financial ocean. Crypto is a $1 trillion market cap that's connected to the tech stocks, which is NASDAQ. So it moves like tech stocks, which is connected to the stock market, which is much bigger, which is connected to the bond market, which is significantly larger. And if you had to really get down to brass tacks, it's actually the derivatives market that's the biggest. But as a beginner, let's keep things simple. Crypto is connected to NASDAQ, which is tech stocks, which is connected to what happens to the stock market, which is driven by what happens in the bond market, which is debt being issued. When you're looking at the bond market, where we are today is the actual yields on bonds have pumped, which means when this goes up, crypto usually does not go up because it's expensive to borrow money, which means money is not flooding into the system. At the same time, they're not printing money and dumping into the system. So until this borrowing rate goes down, it's much more difficult for things like crypto to pump. Because if bonds are, the yield is inverse from the bond prices, but let's just think about when bond yields are up, money is expensive, which means companies that would normally borrow in the stock market can't get debt, which means that crypto does not have that money flowing into it. Right now, bond yields are up, but dropping from here would be the process where crypto actually pumps. At the same time with the dollar is at a resistance level that it's not been for a very long period of time. When the dollar goes up, crypto doesn't pump. But the dollar dropping from here over the next couple of years would be a big tailwind to crypto pumping. So things look like they're lined up. Liquidity looks like it's lined up. They've started to print money already. And looking at how much debt they have coming up, it looks like they're going to have to print money. And there will be some excuse to do that, whatever that is. Now, one of the most important things to look at is the psychology of the market, because markets are simply psychology. Right now, things are at massive discounts. There's all these signals that are saying that within the next 2 years, it's a really good idea to start looking at buying now. But people are not. When we get to the point that everything pumps, then people will run in and buy. And that's because 1, they don't have a plan. 2, they don't understand what's going on in the market. 3, they're going from emotions. So this is the actual emotion wave that we're looking at, that most people go through. This is classic within the crypto markets. This is classic within any market. Right now, there's been this long period that seemed like a long period. There's been this period where crypto prices have been down, so people got angry, people got depressed, We had panics where Luna collapsed and all the institutions collapsed and FTX happened and all these things happened. There's no way to know where exactly in this journey we are. Right now, it seems like we could be at disbelief, which is on the other side. But this cycle of emotions is most important for you to tune into. Because when everybody else is depressed, when everybody else is angry, when everybody else is scared and fearful in these markets, that's when you want to be making purchases. When everybody else is euphoric and every taxi driver and your grandma is telling you that they want to enter crypto and everybody tells you that they're getting rich from crypto, that's when you want to get out. In simple terms, right now we are down here, somewhere down here. So my belief is that whenever we're in this range, I'm happy to start buying crypto. Okay, so this is starting to give you a clearer understanding of how to start thinking about these waves. So let's actually give this an example, right? Let's look at Bitcoin. So if this is Bitcoin, this was back when we had the lowest point, which would have been the depression point. This was COVID, right back here, right? From there, we went, when it recovered, everybody was convinced that the world is going to end. There was complete fear and mayhem in the markets. There was anger, there was depression, there was all of these negative, fearful emotions in the markets. Then even when it pumped here, I remember people were in disbelief. There's no way it's going to go from here. COVID is shutting down the world. Everybody's saying the markets are going to collapse, yada, yada, yada. And there was complete disbelief at that point. So that's your disbelief point, right? And then it did dump. It did dump again. And people were like, see, I told you it's not going to go anywhere. And then we went on the run, the 2020 run. And that's when, initially some people had hope. Then people became optimistic. Then they believed that it would pump. Then they were thrilled that it pumped. Then they became euphoric. So here, disbelief. Some people still have hope. Then they start to believe, oh my God, it is pumping. Then they start to be thrilled that it's pumping. And by the time they're thrilled that they're making so much money, they start telling all their friends, everybody, it goes out on the news, everybody starts to hear about it. They run into the euphoria when people were saying it's going to go to $400,000. This is insane. Get in now or you're missing the train. Now remember, most people haven't actually made any money in this process. Even the people who got in down here, that bought it at 3,000, 3,500, when it was at 70,000, they thought they're millionaires. But they actually never took any money out. So they actually didn't make any money. It was just fake money on a screen. But my point is, people ran in, people got euphoric. It hung out here for 4 months, letting those people get in at the very top. Then it dumped. But those people were in such a state of belief that it's going to go to 400,000 that they didn't sell. So they were euphoric, it dumps, people become complacent. And they're like, we just need to cool off for the next rally. Don't worry, we're going to go to the moon from here. And then, this was complacency again. Remember here, everybody was saying we're going to $100,000. People don't sell because they're complacent. And then on the other side, they just hold all the way down as the things are crashing. So then they just hold all the way down. You're complacent, then you go get anxious, then you have denial, then you have panic, then you have capitulation, which is usually selling the bottom. And that's what we saw here where, Luna and I think this one was FTX. No, this one was FTX. This one was Luna. So my point is you can see that exact same wave embodied here. Now, on the other side, the process starts over again. So that's where we are. The signals are telling us that that's where we are. It looks like we have gone through that wave, and looking at the monthly gives you a much better idea that, we go through the full psychology. Now we're here. Now from here, it usually doesn't just shoot off to the moon from here. From here, just like it was back here, it looks like it's moving, then it goes, then there's a dump, then there's a crisis that it's used as the excuse to pump money into the markets. And that crisis is what sends it forward. So Could a similar thing play out? Yes. But my point is understanding that psychology. So if right now you feel disbelief and anger and you don't even want to look at this market, then that's when you should be looking. When people become thrilled and people become euphoric and tell you to get in, that's when you should be getting out. At least that's the psychological understanding of it. And this is another way to represent the same thing. Bitcoin has been following this growth curve since 2008, since its birth. When it's down in these blue zones, it's really amazing to buy. And when it's up in these orange zones, it's better to sell. Right now, we're deep into the blue zone. So again, this is telling us that it's a good idea to buy. Okay, so that's enough with these charts. So hopefully you get the idea now that the point is to understand why we're buying this stuff, because there's computers that do stuff and apps that do stuff. Understand why it pumps. It pumps because they print money and dump it into the system. And then be able to understand that things are at a cheap discounted rate, right? Solana's at a 90% discount. Bitcoin's at a giant discount. Most of the good coins out there are at massive discounts, okay? So now let's really think about keeping this framework in mind. What should you be doing today? Or at least what am I doing today? Again, this is not my financial advice to you. This is education to help you understand what is a good game plan that could be followed. First thing I like to think about is what is the timeline that I'm investing on today? If I put in money today, I will put it in with the mindset that if I can't touch that money for the next 3 years, it wouldn't affect me. I will not put in money that I need within those next 3 years, because that takes the edge off. Then I know when the market does what the market does, I will take profits. Otherwise, I don't need that money. So having a 2 to 3 year timeline for me is the most important thing. If your timeline is shorter than that, then you're listening to the wrong place. That's a fact. You should listen to a trader. You should listen to somebody else. My style is long-term investing. Okay. The second thing I will look at is how much risk am I happy with? Do I feel comfortable taking a vast majority of my wealth and putting it into the market and going to sleep well? Or do I feel more comfortable taking a much smaller percentage of my total holdings and putting it in? How much is that? That's the next thing, because that's going to determine how comfortable I feel risking it. Is that 10% of how much I have? Is that my kid's future, which means a lot more? So on and so forth. The other thing I will look at in this time is, what is my psychology? Am I somebody who is anxious, where every little movement bugs me and I get caught up in the emotion, in which case I'll take less risk? Or am I somebody who's very calm and zen and familiar with this space and has the faith, and I can sleep well knowing that I've risked a decent bit? That determination will then tell me how much money I put in, which will then tell me how long I'm willing to keep it in there for, because I don't need that money. Hopefully that makes sense. So building your timeline, understanding how much risk you're willing to take, how much money you're willing to put into the market, and what your psychology is and how you are dealing with it will define the next steps. So then the question always comes up, okay, I figured all that out. What should I put my money into? I thought that's what this whole thing was about. And it's funny, building your plan means that this is a small piece of the whole plan. Which thing you buy in crypto, funny enough, doesn't matter very much. Like Raul Paul says, he's like, it's money printing. When they print money, everything goes up. So don't fuck this up. That's his quote. Don't fuck this up by overthinking which one I'm going to buy and all this stuff. Okay? The more important thing is, how much risk are you taking? Are you risking all your money on the next pepe, which means the probability of you losing all your money is very high? Or are you investing it into the next valuable use case of this technology, which means the probability is higher. But no matter which way you go, as long as you don't throw your money down a well, you're probably going to make money in this space, probably. So what to buy? There are what we call layer ones. And layer ones, in simple terms, are the computers that are actually running somewhere. Simple. That's your Bitcoin, XRP, Solana, Ethereum, Cardano, Polkadot. Polkadot technically counts as a layer 0, but my point is it's layer ones are computers that are actually running somewhere. That makes perfect sense. These computers are going to be useful in the future, and they are today. Therefore, they're valuable. So you buy a coin that is needed to run that computer. Layer 2s are making those computers more efficient. And my favorite there is Polygon. And if you buy Polygon and lose all of your money, don't blame me for this. You should have just listened to me and buy it. I'll say that again and again. But Polygon makes Ethereum more efficient. So layer 2s are going to be the ones that are on top of layer 1s. That's why they call layer 2s. One huge area that a lot of people lose a lot of money is DeFi, decentralized finance, because there's all these coins that'll promise you insane returns for investing in them. But in actuality, they're just taking money from one person and giving it to the other person. But decentralized finance is basically financial products that pay you a return for giving your money to them. A lot of people got very rich in that process. I don't touch it, but it is a sector to think about. Most of the other coins that you're looking at, or a vast majority of the other coins that you're looking at, are actually apps in simple terms. They're apps that do something, right? Like Filecoin is an app that allows you to use hard drives from across the world. Helium is an app that allows you to set up Wi-Fi networks and get paid for that. So on and so forth. There's thousands and thousands of apps doing different things. And what you're buying with that coin is the ability to use that app. So then you have to verify, is this app something that's useful to the world? There's a lot of amazing projects, too many to name. And I'm not going to name them because you're probably going to go out and just buy those because I said them here. And that's exactly what we're saying not to do. My favorite upcoming area within crypto is tokenized real world assets. Real world stuff turned into tokens. Tokenized real estate, tokenized mines, tokenized farms, tokenized productivity supply chains. Again, and I am an advisor in these projects, so I'm definitely biased. I'm compensated for these things. I'm not going to hide that. So again, do your own research. But the BlackRocks of the world have confirmed that tokenized securities and tokenized real world assets are going to be the future of where this space goes. So that's a huge favorite of mine. Tokenized AI is here and it's on the way. There's a wave that's going to come where AIs are going to have tokens backing them. Because when you really think about it, if AI is going to replace humanity and do the work, then doesn't AI get paid to do the work? Or does it just do the work for free? I don't think work's going to become free. So the AI will get paid to do the work. But the AI is a computer that doesn't really need the money beyond just running itself. So it's going to have value sharing mechanisms, tokens, that are going to allow those systems to pay the people who are supporting its ability to do work. That's a thesis of mine, but that's also the universal basic income style payment mechanisms that the people who are making AI are talking about. But AI is going to have tokens attached to it. I can tell you that. And then finally, metaverse is a huge space to look into when it comes to crypto. Apple's headset is launching in the beginning of 2024. That officially launches the metaverse. And that new experiential universe that they're creating is going to have so many different tokens, and value models built inside of that you can participate and benefit from. A great one there to look at would be something like Render, where they're decentralizing GPU power. And if you don't know what that means, don't buy it, right? So these are the spaces to look at. But here's just 2 questions you need to answer before buying anything. Number 1, what does it do? Just explain to me in simple terms what the thing you're buying does. If you can't explain to me what the thing you're buying does, then it's dumb that you buy it, right? If I can't explain what the thing does, why would I put my money into it? Okay, so first question to ask yourself that I always ask myself, what does it do? Second question, where's the money coming from? Right? Because if I can't answer where the money's coming from, then the money's coming from me. It's coming from my pocket and it's going to somebody else's pocket. Otherwise, I should be able to explain why I'm getting paid to hold this thing. Does that make sense? What does it do? Where's the money coming from? Okay, let's do that exercise for something like Ethereum. What does it do? It's a bunch of computers that you can program to do shit. That's valuable. We know that's valuable. Okay. Where's the money coming from? From the companies and people that are building on those computers, and from the people who believe in the future potential of those computers. That makes sense. Then I could just go look at how many developers are working on it. Thousands. How many projects are being built on it? Thousands. How many companies are attached to it? Thousands. So in today's world, if you can just answer those 2 questions, and you can have a varied set of different areas that you're invested into this space, that's the best way to approach this space. Now, remember, you figured out how much risk you're comfortable with, how much money you're willing to put in, how long your timelines are, how to psychologically deal with it. And then you've looked at the spaces, and then you've answered these questions. What does it do? Where's the money coming from? And both of those seem like logically good answers for you. Then you get to the point of buying some things. Now, one thing that I can tell you is today, there is insane adoption happening in this space. BlackRock is creating a Bitcoin ETF. PayPal just launched a stable coin on Ethereum. So that's hooked up to their whole system. Countries are adopting it. Companies are adopting it. Everybody across the world who's interested in this space, banks are adopting it. The adoption is here. So that is when the real growth of this whole market happens. Okay, so let's say you've gone through this. Now you've figured out, I want these coins. And what you'll probably do is you will come up with a list of 30 coins that you want to buy. I don't do that. Because the human mind can only manage about 5 to 7 things well before it gets overwhelmed. And even 5 to 7 is a lot. But me personally, I like to go with 7 or less coins. 7 or less coins. I don't need to buy 30 if they're all going to go up in varying numbers for sure. I'm not going to be greedy. I'm going to manage my emotions and psychology, and I'm just going to buy 7. Let's say I've picked those 7. Let's say I pick a couple layer 1s, 1 layer 2, a couple banking coins, and one metaverse, and 1 real world asset coin. Let's just say that's my balance, okay? The way I like to look at it is that the bigger the market cap of the coin, the lower the risk it is for me. So like the top 30 coins that have $100 billion market caps, 30, 40, $50 billion market caps, somebody's put a large amount of money inside of those coins. The people with money have put large amounts of money inside of that coin. That increases the likelihood of that coin being safe. It does not guarantee it, but it increases the likelihood of that coin being safer. If a coin is worth $2 million total, it's obviously less safe than something that's $200 billion worth, like Bitcoin, because somebody's put about $100 billion into Bitcoin to make it worth $200 billion. And so they've done their market research, hopefully well. Now, there are times like Luna where it was at $50 billion and that was a scam. So it's not a guarantee, but the higher the market cap, the lower the risk. The lower the market cap, the smaller it is, the higher the risk. That's a simple way of looking at it. So how do you enter? If we're in this zone now where it seems like there's money coming up and it's good times to enter, how do you enter? The simplest way a lot of people do it is DCA, dollar cost averaging. That means you just put in a certain amount at certain intervals. So giving my example, they would be like, I have to put in $10,000. I know it's a good time now. I would just start putting $1,000 every 2 weeks. So over the next 5 months, I put $10,000 in. Now, that $1,000, if I have 5 coins or 7 coins, then I would split them in between those coins. How I split them is up to me. What other people do is they actually just wait for a good event to happen and then they put the money in. I kind of agree with both, that if there is something like a black swan event like COVID, where there's huge panic and the markets just fall off of a cliff, buying that in a big chunk for me is viable and valuable. But at the same time, having a consistent entry is the safer thing to do. Now, if I enter 10 times over the next 5 months, then I have 10 different prices that I bought each coin at. And if I have 7 coins, that's 70 different prices I have to track. For some people, that's just a spreadsheet and it's easy. For other beginners, 70 different prices instantly make them want to run from this whole process. So again, depends on your psychology. Some people are like, look, I'm here for the 3-year run. I'm happy to buy it at whichever price. I know the one price that I bought it at. I don't have time to sit here and watch spreadsheets, and I will take my money out later on when it's higher. I know grandmas that are willing to do that. For the dollar cost averaging people, they put in whatever amount they put in at whichever interval. And then you just keep track of, I bought, this much at this price, this much at this price, this much at this price. And then you're able to have a average entry price so you know when you're profitable. Both of those are ways to invest. Another way that people are investing is they are investing into the new projects before they launch. So for me, I saw that in the crypto world, projects would launch, and by the time they launch, they've already exchanged hands a bunch of times, and the VCs and the rich people have already pumped up their prices. So by the time they launch, they dump it on the average person, and the average person loses their money. We've been building projects and working with projects where the average people get to participate first before they get handed off to the big players. So there's a lot of new projects that are available to look at. But getting involved on the ground floor of a project allows you to, one, get it for a very cheap price. But secondly, at least in what I like to do, is I then find projects that are based on real world businesses, right? So for example, right now, just a big real world business, Coinbase. Coinbase has been cheap because the whole market's down, so Coinbase is down. But it's a real business that millions of people use. So if you're a stock investor, something like Coinbase is not a bad place to look at. For me, Real Earth Elements was that project where we tokenized mines. I saw the project, saw the business, saw the model. It made sense to me to participate. And yeah, it's going to be years before it has its big pump. I'm happy with that, but it's real mines. Same thing with FarmScent. FarmScent is tokenizing commodity supply chains. And to me, that makes sense that food is becoming more valuable and putting food on tables feels good. So getting into that project early made sense for me. So getting involved at the beginning of the projects is a big way to get involved in these things. But remember, that's high risk. All of these projects I'm talking about, they are high risk projects because you have to understand that it's a real business. It could just fail. It is just starting. And if you're one of the earliest ones in, you're taking the highest risk with also higher rewards for taking that risk. So you could enter in chunks. You could enter in a lump sum payment, depending on however you'd like, or you just could not enter. If you're somebody who's like, look, this whole thing gives me anxiety, I don't want to enter, don't enter. Go find somebody who's able to manage it for you. Now, when you're looking at managing all of those coins, right? Let's say, okay, you've made all these entries. I've made all these entries, right? When you're looking at managing those coins, you have to create a lifestyle around it. What a lot of people do is they will not pay attention the whole time now. When everybody starts to run into the market, they run in and they have no plan, no strategy, no framework of management. If I today end up buying these 7 coins, I'm going to set up a system in my life where I'm going to sit down once every 2 weeks, once every week, or twice a week or something, or maybe every day. I'm going to sit down and look at the portfolio and execute the rest of this strategy. Now, at the same time, you're building ways to manage yourself, right? I'm going to train myself to not freak out when it goes down. I'm going to train myself to not get super excited when it goes up. I'm going to meditate and create a lifestyle around it where my self-worth will not be attached to these numbers on a screen, stuff like that. At the same time, I'm going to build a lifestyle where I can learn about it. I can click the right buttons. I can track the things right. All of that it takes time to get going. And that's part of executing your plan. Most people don't even write the plan, let alone execute the plan. At the same time, once you start to learn a bit more, you realize you can automate a lot of the functionalities that we're going to discuss, like taking profits. You can actually automate orders that when you're not looking, if the price goes to a certain level, it'll automatically do something. But that's all going to come out of you setting up a lifestyle that allows you to manage things correctly. So this part was just focused on you entering, because today is the right time to start thinking about entering. For me, for you, I don't know. That's your plan. For me, today is a good time to start entering. So we're talking about entering specifically, but beyond just entering the market, there's a lot of other pieces you need to be aware of. One, we just spoke about that you need to be able to track and monitor what you've done. So you have clarity around what I bought, why I bought it, what prices I bought it at. There's a bunch of tracking and monitoring you need to have. You may have it on different wallets in different exchanges. You need to track all of that and being able to see it and understand it. As a beginner, especially, that's important. Then you need to have a profit-taking strategy in place. We're not going to go into the details in this one. We'll be doing follow-up talks about that, especially when it becomes important. But you need to have a plan of how to take the money out. Because like I said, a lot of people ride this thing up, look like there's a lot of money that they've made, but they don't actually take any of it out. And then they ride it back down. And more often than not, they sell it at the bottom. So you need to have a plan of how to take the money out. I'll give you some examples. Some people say, okay, I bought 100 coins at $1. My price is $1. When it goes up 50%, I'm going to take out 30% of the profits. I bought it at $1, once it goes to $1.50, I have half my money as profits. So I'm going to take out a certain percentage of the money. Then when it goes up 50% again, I'll take out another chunk. Goes up 50% again, I'll take out another chunk. That's a simple strategy, but it's very effective. Now, when that happens, when you bought $10,000 worth and now it's at $15,000 and you've written down that I'm going to take out some money, the demon on your shoulder and in your mind is going to say, yes, but if we take it out, then we'll make less money. Why don't we leave it in there and then we'll get more rich? That is the psychological trick. That at that time you've written on a piece of paper that you're going to take out this much money. So you take out that much money. Otherwise, the demon's going to keep you in the state of greed and you'll never take the money out. And you'll be like 95% of people in this market. My point is, have a plan for when that money is going to come out. And for me, I always have the mindset that at some point, I'm going to sell everything because I bought it for a certain price. Once it's way higher, and we'll go through how I like to do it. Once it's way higher, my plan is to sell everything and get more money out. Okay? You'd be surprised how many people don't even think that. They think they're just here to hold it forever. And I don't know, die with it or something. Now, alongside that, you have to make consideration of what your legal structure is. Because if you buy crypto personally in certain countries and you make money on crypto, you owe a ton of tax on that. In other countries, you owe less tax. In the same countries where you owe a lot of tax, a company buying crypto and making money on it may pay less tax. Certain countries don't allow crypto. Other countries allow certain cryptos. There's different classifications. There's different reporting that has to be done. There's different ways to make sure it's all compliant. So all of that has to be taken into consideration for you from the beginning. Otherwise, too many people get down to the end, and even the ones who make the money, when they try to put it in the bank asks questions which they can't answer, which causes problems. So you have to have your legal implications considered. You have to understand if you're doing it as a corporation or as an individual or as a trust or as whatever your structure is, or at least have thought about it. And you have to consider your tax, because crypto isn't some magic world where tax doesn't exist. Tax applies. So you have to consider your tax strategy on what you're going to do to make sure you pay the right amount of tax. And then you have to tie it all together into a strategy and have it written down somewhere. And I haven't even gone through all the details because there's too many. You have to consider which exchanges you're going to work with. You have to consider which banks you're going to connect with that and which jurisdictions you're going to be keeping your wealth. All of that combined together, including all the things we went through. Write it all down and have it in a place where you can actually have clarity around what your plan is. I know that sounds complicated, but you know what's more complicated? Losing all your money. Okay? And I've seen this way too many times. And I have taken many people through this journey of helping them develop their own plan. And I have not had even a single person lose all of their money because they were wise enough to understand how to navigate this landscape. So if this is too complicated for you, then get somebody's help. If you need help building a plan like this, reach out to us. I'm going to be creating a new course that's going to teach all of these things, but don't buy it. Go and actually figure it out on your own. I'll offer all of this information for free so you can do it on your own. In the end, it's important that you simply understand it in a way that makes sense to you and at least have these pieces planned out. Going forward, get ready to embrace the future because the good times are ahead. We're in the spring of this whole thing. Adoption is at our doorstep. We are at the curve of the exponential age. Things are about to go absolutely bananas within the next 2 years. If you're on the right side, it'll be the best time of your life. If you're on the wrong side, it will be challenging. In the meantime, stay educated. The single most valuable thing you have is your knowledge and your skills. Learn about this space, learn about yourself, learn about different projects, learn about building a strategy, learn about how it all works, and learn about how to participate in a way that's the best for you. Learn, 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 learn. The potential in this space is beyond the understanding of even my mind. There's just such infinite potential that the next 250 years will be defined by the stuff that's being built today. It's like we are at the beginning of the invention of technology or the Industrial Revolution. It's like the steam engine, electricity, and oil and computers all got reinvented at the same time. It literally is like that. The new oil is data. The new mind is AI. The new experience is metaverse. The new value mechanism is digital coins. There's a lot of shifts going on, but the amount of impact and potential for growth that exists today will never happen again, and has never happened in history. And if you're on the right side of it, it's generational wealth beyond anybody's wildest imaginations. And in general, just participate in some capacity. Because the worst thing that you can do is actually just be resistant to this whole space. If you are, I don't even know how you made it to the end of this talk. You're definitely not resistant to this whole thing. But do something. At the least, take a step towards the direction and watch what the universe does for you. I'm not going to go too long. Hopefully this added value. Build a plan. Understand where we are today. Going forward, it looks like times are good. And become knowledgeable in this space so you can actually manifest whatever's meant to be for you. Beyond that, we'll see you next time and talk about some amazing stuff. Hopefully you have a great day. Bye for now.